What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So you guys asked me 5 dividend stocks to buy from a bear market. Some of them I own, some of them I don't own, but capitalization is important. And I always tell people, don't try to time the market. Some people are like, oh, you're falling on a knife when you're investing. But at the same time, you're going to try to time the market. What happens when you're busy at work? What happens if you just something happens, you just can't throw money in at that perfect time with a candlestick? So I'm going to provide my rationales as to why some of these stocks are solid dividend stocks for a bear market. Definitely excellent dividend growth stocks. Again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I'm going to provide my rationales as to why these guys are solid. So if you're new, make sure you hit that notification bell after you subscribe. And let's check these stocks out right now. So the first one I'm going to go over is Restaurant Brands International. This might be a curveball to you guys. It's sitting at 55.33, dividend yield 3.90%, PE ratio 21.15, average volume 1.41 million, market cap 16.94 billion US dollars. Its year range is 46.68 to 62.49. Day range is 54.84 to 55.47. Its previous close is 54.73. These guys have not done well against the S&P recently, and they're still struggling, which makes them a very attractive dividend stock. I don't own this one, but this one's definitely on my radar, and I'll show you why. Their brands include Burger King, Tim Hortons, Popeyes, and Firehouse Subs. So these are definitely in-demand companies that people have for fast food or if they're in a hurry. And I tried Firehouse Subs recently for the first time. It's actually pretty good. So let's go over their revenue and their dividend history. I wanted to go over the revenue because a lot of you guys are new to my YouTube channel, and I like to show the revenue on certain stocks. Definitely underrated and underground dividend stocks. So 2015, this is in millions US dollars, 4,052. 2016, 4,145. 2017, 4,576. 2018, 5,357. 2019, 5,063, 2020, 4,968, and then 2021, 5,739. So 2020, you can blame the pandemic for a little bit of a decrease in revenue. So the other thing is, if you're in a bear market or a potential recession happens, people are going to be a little bit cheaper than that. They're not going to be going out as much. There's a strong correlation with that. People are going to be tight with money. So Burger King is a little bit cheaper than buying a $100 steak sometimes. So let's jump to their dividend history. And what attracts me to these guys is their dividend growth. Let's start in 2016. So it was 13 cents, to 14 cents, to 15 cents, to 16 cents, then to 17 in 2017, to 18 cents, to 19 cents, then to 20 cents in 2017, and then 2018, 21 cents to 45 cents, to 35 cents, to 37 cents, then 2019, 50 cents, to 52 cents, then to 2021, 53 cents, to 54 cents in 2022. So the payout ratio is 73%. I'm not too worried. These guys are fast food. They do pretty well. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but they are in demand. People are always going through the drive-through. Number of dividend increases in the last 5 years is 6. Annualized dividend growth in 5 years is 9.10%. So if you bought one share, you made 216 with a 3.95% dividend yield. That's a pretty good range for a dividend stock, especially with the dividend growth is 9.10% in 5 years. Let's jump to the next dividend stock. Next dividend stock is McDonald's. It's sitting at 248. Dividend yield 2.44%, a PE ratio of 30.68. The average volume is 3.00 million. Market cap 183.16 billion US dollars. And by the way, they just had a dividend hike announcement. Year range is 217.68 to 271.15. Its day range is 247.25 to 249.50. And its previous close was 246.60. So I decided to get McDonald's breakfast the other day, and I saw a sign that somebody put that I'm the only worker here. I was at the drive-through, felt really bad because people weren't showing up to work, and that's a common thing right now. Do not be surprised if companies like McDonald's, Burger King, Wendy's, and others have robots starting to take place of people, because robots are a little bit more reliable than people. People sometimes don't show up, and which is bad. And that's the big problem, is with people not showing up to work and demanding more money, there's going to be an adaptation with a lot of these companies, especially, franchises like McDonald's or restaurant brands or others. So I'm just going to take a note of that. There's a lot of companies that are starting to research in robots to flip burgers. And I would not be surprised if these guys are the first ones that do it. With the changes and the attitude and work ethic out there, they will be I can almost guarantee that these guys will be the first ones having robots in their restaurants. Now, don't get me wrong, it could be completely wrong. Don't be surprised. Now, let's jump to their dividend history, because their revenue is fantastic. Let's just start in 2014. It was 81 cents. Then 2015, it was 85 cents. Then 2016, it was 89 cents. Then 2017, it was 94 cents. Then 2018, it was 101. 2019, it was 116. Then 2020, it was 125. Then 2021, it was 129. Then 2022, it was 138 to 152 with the recent dividend hike announcement. So the dividend growth in 5 years is 7.28%. These guys have been through a lot as a company and have adapted so well as a company. Payout ratio is 56%. Number of dividend increases in the last 5 years is 6. You bought one share, you made $5.52 with a 2.24% dividend yield. So right now, you're thinking bear market. What are companies that are in demand? People are going to be a little bit cheaper. You got QSR, you got McDonald's, MCD. So I just wanted to address that. These are companies that are in demand all the time. It doesn't matter what market it is, bear market, bull market, you name it. These guys are in demand. Let's jump to the next dividend stock. Next dividend stock is Starbucks. It doesn't make sense how people buy coffee all the time, and when they could be making it at their place. It doesn't matter. And Starbucks is capitalizing on that with people buying all these crazy drinks that have stuff mixed in it, and they're just making even more of a profit. So gluttony is a sin. Starbucks, 88.83, dividend yield 2.39%, PE ratio 24.98, average volume 8.53 million, market cap 101.92 billion US dollars. Its year range is 68.39 to 117.80. Day range is 88.08 to 90.47. Its previous close was 88.90. Now, have done a few videos on these guys. I just bought these guys recently. Revenue-wise, they're doing fantastic, but dividend growth-wise is what's even more attracted me. Let's check this out. So there's a few things I really like with Starbucks. One, the dividend growth. The revenue's jumping up like crazy, but they do have a significant stock split history, as I went over in previous videos. So 2015, let's just start. 16 cents, then 20 cents, to 25 cents. Then 2017, you see 30 cents. Then 2018, you see 36 cents. Then 2019, you see 41 cents. And then you see 45 cents to 49 cents. And then all of a sudden, 53 cents. So that's extensive dividend growth. Payout ratio is 62%. Number of dividend increases in the last 5 years is 6. You bought one share, you made 196 with a 2.20% dividend yield. Look at the 5-year dividend growth. So I did a collaboration with Map Money, and we both discussed dividend growth stocks, and the yield's a little bit lower. Sometimes you get better dividend growth. So I like to mix and match high yield dividend stocks. Some of them don't have a really good dividend growth compared to stocks like Starbucks. So that's one thing I just wanted to point out as well. So these guys are doing well. Revenue is done phenomenal, and they are adaptive and expanding like crazy. Now, some people are saying they're closing certain stores, but guess what? They're also expanding like crazy, and they're very innovative. Let's jump to the next dividend stock. And here's a pharmaceutical giant with a pretty good dividend yield, AbbVie, sitting at 144.25 with a dividend yield of 3.91%. PE ratio 20.42, average volume 5.81 million, market cap 255.33 billion US dollars. Year range is 106.86 to 175.91. Stay range is 143.53 to 145.87. And its previous close was 144.41. So they bring a lot of products to the market. I have done a few videos on these guys, so make sure you check that out on my channel when I'm reviewing abbvie as a stock and as a company. But man, they are amazing as a company, and it's crazy. I'll go over their revenue and their dividend history. So check out this revenue. This is in millions US dollars. 2015, 22,859. 2016, 25,638. 2017, 28,216. 2018, 32,753. 2019, 33,266. 2020, 45,804. And then 2021, 56,197. Millions of US dollars. Now check out their dividend growth. And holy cow, look at this dividend growth. 2015, 49 cents, to 51 cents. 2016, 57 cents, to 64 cents in 2017. 2018, 71 cents, and then all of a sudden 96 cents to 107 in 2019. Then 2020, 118. 2021, 130. And then 2022, 141. Now the payout ratio is 42%, which is not bad. Number of dividend increases in the last 5 years is 6. Dividend growth in 5 years is 14.02%, which is solid. So if you bought one share, you made $5.64 with a 3.91% dividend yield. Now, I'm going to go over one more dividend stock. Now, if you watch my previous video, I went over a dividend stock, a growth stock that I bought. But I have another one that's somewhat in demand in the financial sector, and it's doing pretty well, and I've been buying a lot of shares. Let's check that out. And that stock is Huntington Bancshares Incorporated. This is a regional bank stock, a very powerful regional bank stock that I see is undervalued. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. 1406, dividend yield 4.41%, PE ratio 12.51, average volume 21.20 million, market cap 20.28 billion US dollars. Its year range is 1167 to 1779. Its day range was 1391 to 1432. Its previous close was 1385. Now I'm going to go over their revenue and their dividend history real quick because these guys, or I see, is way undervalued, and I'll go over their revenue just to show you how they're doing. The revenue-wise, they've done really well. 2015, 3,154 million US dollars. 2016, 3,782. 2017, 4,740. 2018, 5,270. 2019, 5,655. 2020, a little bit of a pandemic bump or decrease. 5,238, and then 2021, 6,080. Now check out their dividend history, and this is why I made it to 100 shares, and I plan on getting to 400 shares with these guys in the future. Check this out. Let's start in 2014. It was 5 cents. Then it jumped to 6 cents in 2015. 2016, it jumped to 7 cents to 8 cents. 2018, it jumped to 11 cents. And then 2019, 14 cents. Then 2020, you can blame the pandemic. It was stuck at 15 cents. Then it jumped to 16 cents in 2022. So payout ratio is 45%. Number of dividend increases in the last 5 years is 4. Annualized dividend growth in 5 years is 6.42%. Not bad. You bought one share, you made 62 cents with a 4.48% dividend yield. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Make sure you smash that like button. Let me know what you think of this choice. This is bear market dividend stocks. I wanted to add a financial sector stock. Definitely fast food restaurants and companies like Starbucks are going to be in demand. And abbvie's another one that is in demand because it's a pharmaceutical stock and people need medications. You guys take care and have a good one.